Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Monday, August 21st, 2017. Happy Monday, everyone. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, you can see that price is holding below the key range low. Remember, we had the impulse sell-off here, and it set the key range. Again, this is what I always mention to our trading room, is that this is the best opportunity to buy oftentimes, or at least the opportunity to look to buy. Doesn't always mean that it works out, but being below the key range low and rejecting a further advance to the downside usually ends up in a short squeeze to come, usually back toward the midpoint of the range, and at times all the way across the range. So there could be a squeeze coming if prices cannot remain below 24.20. So that's going to be the key level to watch there. Likewise, again, if price pushes above 24.20 and then really doesn't see an additional continuation and fails, then we may be seeing a continuation back toward natural support around 2400. Again, any test into 2400 to 2405 would likely be an opportunity to look to trap and return back toward 2430. So that's an area to look to buy on a swing basis. So we'll keep an eye on this and see how it plays out here. As always, the June 14th key level, 2436, remains an important pivot in the charts as well. Let's take a look at the intraday time frame. There it is. On an intraday basis right now, what you'll notice here is that over the last afternoon plus here, we've kind of pushed back. We initially had some strength here off the morning lows back up. Prices failed to hold above that 24.36 quarter, and you can see how it quickly came back down to support, and now we're bouncing yet again. Here's intraday VWAP. So this area of support has been very, very solid here, and now we're back above the previous week's close. So any pullback into 24.24, maybe even in 24.23s, could offer an opportunity to buy and push for a move above these recent highs and perhaps back toward 24.36. Again, 24.30 is going to be the key level. That's going to be the key pivot to watch by the end of the day. Are we above or below that level? All right, let's take a look at crude oil. Crude had a significant rally on Friday. We'll take a look at that in a moment. And you can look at how this daily bar is constructed here. Just a major, huge range, high range daily bar right there. It all started when price popped back above or held 47s and pushed back above the previous high and did not really reject it, just started to push through it. And it was really about right there where this thing really took off. It was 47.60 coming into 47.65. That's when price broke outside of third standard deviation and started to see a price discovery move. And this thing just continued onward throughout the rest of the session. Right now, early on, the early pullback has been defended, but we're now around composite VPOC, which has shifted a couple of times. First shifted up here to 49.76 from 45.66, and now it has shifted down to 48.74. So this is an indication here that we could see a continuation at least to the upper level at 49.76 after the squeeze. The next pullback will want to be a buying opportunity. So on a swing basis, we can get all the way back toward 48s, and that could be a fantastic buy. Maybe even a little bit lower into 47.65, but ideally 48 would be a great buy on a swing basis for a move into 49.76, 50 to 50 or 50 half. All right, so let's take a look at the intraday. On an intraday basis here, take a look at R3, which is the third standard deviation of VWAP here. At first, we had been flat with VWAP here, third standard deviation here, third standard below. Price broke above it at around 47.50 here, and then the first pullback held, and then you start to see R3 climb. So this is what we talked about before it happened in our room. And I mentioned if we're going to break through these highs, and it's going to be a price discovery phase, you will see R3 start to curl up here, and that's an indication that the data set is spreading and that you're likely about to see expansion. And that's exactly what happened. We got a nice continuation, and price pushed right back to these FOMC key levels and held. Very important little spot here where it's at. But now we're holding at these highs. So we have a very clear area of support and resistance here, and it's a fade the edges short term with a flat VWAP. So you want to be looking to buy here and sell here with an upward bias. So it's better or safest to buy pullbacks. If we do break below 48.40, wait for a retest of 40 before looking for that swing buyout. So short-term buyout here upon a failure to hold these levels, so buy new lows, and then there's a buy opportunity off 48s as well on a higher time frame basis. All right, let's take a look at gold futures. Here's a look at gold. The intraday time frame of gold right here. Let's see, shows a little bit of a bounce off the 1286s. If you go higher time frame into the daily with our pivots, you can see there's been a rejection here. So this current bounce offers an opportunity for a swing short. Remember, this is what we were talking about before. We don't know how the rejection is going to look. But I do know one thing. Typically speaking, before price can reject and return to value, it typically needs to take out a recent high or low. Right here, we had come very close, 98.10. This was 98.80. And so price did not take out that high and did pull back. I mentioned the strength of the trend, and I mentioned that this may lead to one more shot that we can watch for rejection. And look at that day right there. That was significant. Friday, price pushes well through 1300, tops out at 1306.90. By the end of the day, had closed back to 1290. Major rejection. High range day. The midpoint is right where the stops came out. This is a perfect opportunity to fade back toward value, but that still doesn't mean that there's not risk involved. So you have to watch it very closely, but a return back toward recent highs here, back toward about 1298 to 1300 can offer an opportunity, or as shallow as where we are now. So 94s, 95s, all the way up into here can still offer an opportunity to defend perhaps for the next day or two ahead of a return back down. So price, if it remains below 1300 here, the next stop is likely 1250, which is CVPOC on this chart right here. So we could be looking at a return to 1250 here pretty soon, and the entry could be very near over the next day or two. So continue to watch this here. Price needs to remain below 1300. Lastly, the NQ. The NQ is also pulled back. Again, it continues to have trouble with this 5900, 5907 half, the top of the key range. You can see multiple tests here. I talked about 5900 to 5950 being the zone to watch. Above it squeezes, and below it returns price back toward 5729. And again, we've fallen just shy of 5729, and we're holding at the recent lows within an inside day on a 2-day range, narrow range. So right here, again, very similar to the ES, we could easily see after this pullback here, we could see this release itself back up and continue to trade here for a while. Overall, this thing is still bullish. This is the best longer-term pullback buy zone right here. That's the same zone I mentioned before, and we fell just shy, but price has not really pulled back a whole lot. We've had a couple of one-day wonders, but not really much in terms of stitching together a nice sell-off. So to really believe that it's going to come down here is hard to believe, but we could still dip down right into this zone and provide a decent attempt at returning price back toward 6,000. So right now, not really the best. There's other better opportunities like crude oil and gold right now, but this one's developing, so we'll continue to watch it. All right, that's it for now. Let's see how this new week plays out. Good luck, trade well, and I'll see you soon.